Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. A big day today. The old regime, the Biden-Harris regime, is now out. You have the Trump inauguration today. So you have the markets closed. But the question everybody has on their minds, or should have on their minds, is how much damage control can the Trump team do? Biden, in my opinion, will go down as probably the worst president in U.S. history, at least in modern times. This man piled on so much debt. We have $36 trillion in debt. We're spending $1.2 trillion right now to service that debt. We have a cultural divide in the country that he helped flame. We have a lot of issues in the country. We have $7 trillion rolling over this year alone. We had record high deficits of 7%, printing, adding to the debt, $1 trillion every 90 days. Total reckless abandon under weekend at Biden's because nobody knew who was actually running the White House. The man hasn't been correct since the late 2018, 2019. We all saw this coming. And now you have a course correction with Trump. So Trump has some smart people around him. What can they do? You know, my thesis stays the same. This is the Titanic. Iceberg's already been struck. By iceberg, I mean every single recession indicator with 100% accuracy has already triggered. The unemployment one in August of 2024. The question is, how long can the market euphoria and how high can the market euphoria carry the market? I don't think it's any stretch to say everybody that analyzes cycles can tell you this. The market cycle will end the same the way it always does. The question is always the timing. For me here in 2025, guys, I've told you this before, I'm taking it quarter by quarter, focusing on the swings, coming off of two great trades that I had on my S&P short, my DAX short, over 300 points on the S&P, 700 points on the DAX. The markets are rebounding at the exact candle pivot, the pivot low on the lunar cycle we talked about 2 weeks ago with the market shakeout. Everybody's focusing on the head and shoulders. The market made its pivot low, rallied back up. Now the question is, are we just making a lower high or are we going to some blue sky territories in the main market, which is the S&P? Bitcoin just put in a new all-time high today prior to recording this video. So I think 2025 is going to be a roller coaster. Everybody wants to know when the actual crash will happen. Well, first of all, I've said this many times, but I just want to repeat it. The way the market cycle will end is post-correction. Once you get a correction, this next trade I'm looking at is for a correction. When you get a correction that comes down 10% or more, the market will rebound. It's an ABC. The market will rebound. And if that rebound does not take out that all-time high, guess what happens? The market will fall back down to support. If it takes out support, you're going into a bear market because your next move is down 20%. This move happened in the GFC. This move happened in .com. It will happen at the end of this cycle as well. Conversely, if you get this correction and the market rebounds back up and hits blue sky territory, well, then you got to look up. That could be S&P 6,900, 7,000. You have to look to the upside. So you need to be flexible with what's going to happen. Understand reality. The Titanic hit the iceberg. You're taking on water. The rich keep getting richer. They're on the top deck listening to music as people are drowning in debt. drowning in credit card payments, drowning in loan defaults in the bottom decks. But it takes time to fill up that big ship, guys. So enjoy the swings in the meantime, because there's a lot of money on the table to be made. So we're going to focus on the charts, where these key tops could be, the timing for these tops, and the key catalysts coming up. Because as you guys know, we had our lunar pivot. We're rallying back up. Markets are closed. We got Powell on the 29th with the FOMC. Is Powell going to be hawkish or dovish? That's a major catalyst. This market's driven by psychology. And then we have February 7th, which is an ex-BLS job revisions, which should be very bad news for the economy. Now, again, take that on the inverse. If it's bad news for the economy, what do you think the markets will do? Look, I think you could have a hawkish Powell. He sends price down for a pullback, and then you could have bad news on the BLS job revision number, and the market rallies. Why would the market rally on bad economic data? Because the market is desperate. It's thirsting for rate cuts, which have all been priced out now, out to October. The market wants the rate cuts. Understand the valuation of the market right now on the Buffett indicator. That's the market cap of the stock market versus GDP, the market capitalization versus GDP. Right now, we're at 200%. To put that in perspective, in the GFC, we were at 110%. In .com, we were at 120%. This is the most overvalued market in stock market history. How will that market end? The same way the other two end. Dramatic sell-offs, S&P getting cut in half at least, Bitcoin losing a max amount of value, probably to the tune of 80%. That's at the end, okay? You guys know that watching this channel. In the meantime, you have swings to the upside with Bitcoin moving towards our 120, 127 target, and we have the S&P trying to make a new all-time high. So before we get too far in the weeds here in the monologue, let's jump into the video and look at these charts. I spent a lot of time on these charts. I'm really excited to share them with you guys. Be sure to like and subscribe to the channel if you enjoy this content. I answer your questions as always in the YouTube comments. Without further ado, Lee, let's start the show. All right, guys, before we get into the charts, I hope to see you on our Discord at marketmakers.trade. Your first week is free as always and a free gift. You get all of the custom indicators you see me use on YouTube. You get to keep them, whether you stay, whether you go. You control your whole membership through our website, marketmakers.trade. You guys want to trade these markets? You want to trade all the cryptos with no KYC, no VPN? Check out Bitunix. Only with our link, you get up to a 20% deposit bonus, up to $500. All the details on the link. Check out Bitunix. And every video from me is brought to you by SimpleFX. If you want to trade equities, commodities, Forex, cryptos, anywhere, you can trade everything on SimpleFX. Guys, it's available to just about everybody outside of the US. Check them out because it is the best bonus in the business, in my opinion, up to $5,000 based on your first time deposit, and that's awarded to you instantly to trade with. The link will have all of the details. Let's go ahead and start the show here with the charts. All right, guys, I want to look at ES cycles here. So this is S&P futures. I drew this out for you so you could see this. The key takeaway I want you guys to see, this is the market cycle from the pandemic all the way out to current price, okay? The key takeaway I want you to see is natural cycles, Fibonacci, how the market adheres to it. Back with the pandemic. By the way, I just saw as I was recording this video, Biden just pardoned Fauci. That's an interesting pardon. You only need a pardon if you committed a crime. So that's interesting. But Biden pardoned Fauci. But look, all the way back to the pandemic, guys. New moon, what happened? There's your pivot low, right? There's your pivot high. Market collapse, 32%, 1,200 points. Look at how the cycles play out in confluence with one another. Fibonacci resistance for the previous all-time high. Lunar pivot, market sells off 25%. Not only that, each of these individual peaks were between 15 and 20% drawdowns, all coincided with lunar pivots as well. Look at the big retracements here. In 2023, you had the July high, You had your lunar pivot, 11% drawdown, 561 points. And of course, just recently, we had the 10.5% drawdown, 600 plus points, coincided with your pivots, right? And again, key pivot coming up under Powell. You have the January 29th pivot, followed by the February 12th pivot, looking for a top for our big trade, the next big trade, the next big swing trade, I should say. Now, something to consider, I talked about if the market's correct, we get one of these 10+% corrections, 10 to 13%, and then you rally back up. If you make a new all-time high, where's that market going? Well, vis-a-vis Fibonacci, guys, 6,900 would be my S&P target. If we correct the market bottoms and then you rally back up, making a new all-time high, that would be my Fibonacci target. If you make a lower high, the market's going to enter a bear market when it collapses, okay? So again, 2025, put in your brain what your target is for a top and put in your brain what could happen and what needs to happen to see a bear market form, because this could be a year you get both. That's what you need to understand. Let's move forward. If we look at this on the daily time frame, looking at some key pattern structures that we have here, if we were to rally quickly, again, timing is the most difficult part. If we were to rally quickly with Powell, you have the top here on the 29th for another lunar cycle event, right? So if we were to rally quickly, you could see the market pull up. And if we can take out, we'll zoom in to look at the lower high potentials, but this is about a higher high. If you take out your current all-time high, I'm looking for the S&P to go 6360 to 6478. So let's call it 6350 to 6500 between the 29th and February 12th, okay? That's the box I'm looking at here, the kill box I'm looking at, 6350, 6500 S&P futures if the rally makes a new all-time high. That's the level I want to focus at there. If we move forward, looking at this from an extended cycle, because I was having this discussion with some people in the Discord today. What if the market just keeps running? Well, we know the two key pivot points in the marketplace, the cardinal points in the market, are the spring equinox and the fall equinox. Why are they cardinal points? Well, look at the key events that happen around those time frames. .com, when did the market peak? Spring equinox, literally on the day. When did the market really start breaking down? The fall equinox. When did the market bottom in .com? The fall equinox. And by fall equinox, we're talking late September into early October. Spring equinox is late March into early April. So when I'm looking at this chart here on my screen for S&P futures, what if this rally just went out to the spring equinox? In other words, two options are developing in my brain. Option one, rally up, January 29th top to February 12th top. Big correction happens from that point, right? You make your new high, big correction down. Option two, whatever, euphoria just takes over the market. You rally until the spring equinox. I wanted to see what that looks like on a chart, right? Does that make any sense? Well, when I'm looking at this, one thing I wanted to look at here, let me zoom out a little bit, show you guys this. When I'm looking at alternation here with the corrections, if we start back here, back in 2023, large correction over 10%, followed by a small correction. What do we have after the small correction? Just draw these out for you. Another large correction. This is a line chart, so it's based on closes, about a 10% correction. And we just had our smaller correction once again, another 6% drawdown based on candles, right? 5% on the line chart. So you have large correction, small correction, large correction, small correction. What do you think's next? If you answered large correction, then you're thinking the way that I'm thinking. The question is the timing. That's the whole question here. That's what I want to look at. So if we were to run out to the spring equinox for a final top, whether that's 6360, 6478, it takes us longer to get there. Do we have any confluence with that? Well, if you look at this last small correction here, prior to the large correction that formed afterwards, the market ran for 88 days. Very significant from a Fibonacci standpoint. Fibonacci pivots, as you guys know, I think are very important. And 89 is a Fibonacci number. So if we were to repeat this exact fractal, right? This exact fractal, 88 days, 89-day fractal, we can just drop it in here to the current price action of where we are now, right? Drop it into the current price action of where we are now and look at how beautifully it forms up. Okay. This is literally a fractal, but this is what we're looking at here. And it even makes sense when you paste it here and look at it, because how did the market react? We had the 6% drawdown, 5.5%, 6%. The market rallied back up. Where was your first resistance point? Right here for your pullback. Why was that a resistance point? It was your previous all-time high. You have the same structure here. Here's your all-time high, right? If you get this fractal rallying up, where would your first major resistance point be? Right at the all-time high, pull back, spring out, move out to those new all-time highs. Again, this would be an elongated cycle. Lots of catalysts coming, lots of confluences coming in the marketplace, examining all the options of how we can rally. We even have a total lunar eclipse on March 14th as well. So short cycle, pushing up to PAL, maybe selling back off. BLS number comes in, bad for the economy, rallies back up, make your final top there on February 12th, and then we top out and roll over for the correction. Long cycle, you could be pushing out to the spring equinox. I don't know which one it is yet. You know why? Because when you look at the zoomed in view of the S&P futures right now, you haven't even made a new all-time high, right? You look at this, again, where are you? You're above the 618, 6,042. The 786 is just above you at 6,101. You haven't even tested it yet. Now, you did break above your channel, nailed that pivot low, broke above the channel. Reality is you're going to pull back at some point, eat some time off the clock, and we're going to see how high we can get, but we haven't tested peak resistance yet. And I expect to see the markets push up and test the peak resistance, get a close retest of the all-time highs. Look, if I had to guess which way this market's going to go, I think the market's going to make a new all-time high. I'm talking about the S&P. Why? Because the beta tech, the market barometer, already did. Bitcoin, it made a new all-time high. Yes, it came back down some, but it made a new all-time high. The DAX is making a new all-time high. European, the Stocks 50 is close to making a new all-time high. Global markets are pushing up. The FTSE's near new all-time highs. So global markets are pushing up. I think the bias for me, unless we fail, is to make a new all-time high. The question is the timing. So for that, we'll be watching this and doing updates. What about the DAX? Again, key takeaway on the DAX. Every single major drawdown on the DAX coincided with a lunar cycle pivot. The pandemic, 35% sell-off. The previous all-time high, 24% sell-off, 4,300 points. The big retracement of 11%, almost 2,000 points. Lunar pivot. Again, another 10% drop. Lunar pivot. Where are we coming now? The 29th is just ahead of us, followed by the 12th. Key thing to understand. Where could the DAX go if the DAX wanted to continue to run out towards the spring equinox? I think you're looking at 22,708 on the DAX. Right now, it's 21,136. Strong resistance, though, at 21.4, which is what we're going to look at on the daily chart. Now, this is a beautiful geometric pattern the DAX has been doing here on the daily chart. I want to show you a couple of key things here. First of all, I'm going to erase some of this so you can see it. Before every single significant drawdown in the DAX, you've had the same topping pattern repeat over and over again. You got a 5-wave W fractal, you got your 24% drawdown. 5-wave W fractal, 11% drawdown. 5-wave W fractal, then you get the 9-10% drawdown, and you just made another 5-wave W fractal. So let's look at this, because this geometrically, as a geometric trader, as a fractal pattern trader, this gets me excited looking at this. Look at the retracements the DAX has been doing. Look how harmonic this has been. From the pandemic low up to your first all-time high, you retrace 50%. Your next wave, you retrace 50%. Your next wave, you retrace 50%. You see what you're doing? 50% bounce, 50% bounce, 50% bounce. And now it's all about, where is the top? How close are we to the top? So looking at this with my Fibonacci analysis on the DAX, and the reason I'm looking at the DAX as you guys know, like I said, I just had a great DAX trade, and now the market's rallying back up to a new all-time high. Part of trading for me is target selection. The S&P setting up the way that I like it. The DAX is setting up the way that I like it. Bitcoin's doing what I think it's going to do. So these three I'm really focusing on. I have a bunch of things in the periphery looking at different charts, tracking different alts, tracking different indices, but I really like how these three are setting up. When we look at the DAX, once again, key resistance 21,332, which is 21.4. I want to see if we start failing there. I'm using this as a market barometer, the same as Bitcoin, because if we break above 21.4 and keep going, again, confluence for the US markets to move, because the DAX moves like a freaking altcoin. The DAX is a lot of fun to trade when you're on the right side of the trade. 21,138, watch 21.4 on the DAX. That's the key level. Again, lots of natural cycle pivots coming up. 29th with Powell, followed by the 12th. If the DAX is going to top soon, watch between the 29th and the 12th. Look for your top in that region in confluence with the S&P and the US markets, because they drive everything. Let's look at the NQ. This is the NASDAQ futures. If we pull a fib from your all-time high, back down, look at this. So you're still at the 618, guys, 21,779. Again, nothing to get excited about. Nothing I want to trade here personally. I want to see this test the 786 at 22K. If it breaks above it, moves up, then you need to watch 22.9 and 23.5 are your next two stops. Will the NASDAQ do it? Well, a lot of the big tech is struggling right now or going sideways. So again, if you look at 2021, remember the S&P kept moving up till January, whereas the NASDAQ, Russell, and Bitcoin all topped in November. But if everything globally, meaning the European markets, the UK market, obviously the American markets are all pushing up, Bitcoin's pushing up, again, my bias would be to see a new all-time high in this market, but you don't know if that bias is correct or not until you test key resistance. Watch those levels. Key level to hold, 20,660, which was, of course, your pivot low. We look at Bitcoin, guys. Bitcoin setting up beautifully. 3 peaks and a domed house. I've had this pattern for months that you guys have seen it. Now, as you recall, Bitcoin made a head and shoulders pattern. I told you a couple weeks ago, I zoomed out and drew this in the way I like it, incorporating our new target here of 120 on Bitcoin. Obviously, that top target there at 200% is 127. 120 is the peak. I think this is how Bitcoin will finish out. Something of this fashion, a 5-way fractal, looking at a head and shoulders. Obviously, this is a George Lindsay pattern, famous pattern. 3 peaks. You had peak 1, peak 2, and of course, peak 3. And I have this top here just tentatively set at February 12th, okay? The following natural cycle pivot after Powell. That's when I have this top here set. So we'll see how this plays out in this zoomed out time frame. But so far, tracking absolutely gorgeous. Really enjoy tracking that pattern. Looking at Bitcoin here, guys, on the daily time frame. When you look at this, new all-time high on the daily, intraday anyways. Pull down the fib. What did you do? You made your new all-time high. You're trying to level change in Bitcoin. Previous accumulation range down here, right around the top of that 98.99. Now you're up here at 103. You're trying to hold above 100K. Really where you want to stay above, if you look at back zoomed out, that 105,883. If Bitcoin stays above 105,883, holds it as support, it's coming up to that 120, 127 range, guys. If it gets above 105,883 and holds it for support. So you have work to do. FOMC, January 29th. We'll see what Bitcoin does between now and then. And then, of course, the following pivot on February 12th. If we're going to top near term in Bitcoin, I'd be looking in this range. Same across the board with all of these assets, okay? That's my topping range if we continue these upward trajectories with the euphoria in the marketplace. You really want to stay above this 100K would be nice because, again, you're trying to level change to get your next springboard to the upside. Let's look at, I had a request for some commodities. Oil was one that was requested in the YouTube comments. Nice channel that we are trading in, fractal corridor, Wyckoff accumulation range. You had a failure here of an ABC pattern, a 3-wave top. You broke down, but what did you just do? You just level changed, right? Now you're holding the 618, $75.56. You're trying to hold that for support. Just above you is $80.85. If we go ahead and open this up, MFI did its nice cycle wave down. As long as you can hold above 75, still very bullish. You made a level change. You broke out. You got your pullback. Now you're trying to hold this new support level. You may have to accumulate here, go sideways, and that will allow opportunity if buyers step in to see the MFI wave back up. Okay, so you want to try to hold 75. If it fails and you come back down, then you really want to hold that $70 range, which is the top of this trading channel that you were in here. Okay, the accumulation range. Looking at gold, we had a beautiful one-to-one pattern here form. And then what happened here? You had your three tops or three peaks pattern, kind of like you had down Bitcoin, but you had three peaks pattern, and you got a little bit of a turn down. But gold doing the same thing as oil. You made a level change. Notice how both of these prior peaks peaked out above the 618, sold off hard, and now you're trying to hold the 618, 2693 for support. If you can do that, allow your oscillators to reset, eat some time off the clock, chop sideways, get a bullish pattern. Then you can look at 2735 as the next key test. And then you can look at possibly breaking above 2800. Would not be surprised to see gold 3000 here if the markets break out to new all-time highs. Okay. So again, I'd be watching gold as well. We'll look at Solana. Let's get into our altcoins here. Solana, new all-time high. Solana sold back off just like everything else. You now have a level change. You had your first level, your accumulation. Your failed breakout, rally back, held a higher low, right? You held a higher low, and now you made a new all-time high. So you want to try to hold this low, stay above 2.25, 225. If you can stay above that, really bullish, but you really want to stay above 210. And of course, do what? Start going sideways, coil, build up energy for the next move. If Bitcoin gets to our 120, 127 target, you're going to see Solana. I told you I was looking for 300 and 333. Those would be the levels I'd be looking at on Solana. Wi-Fi, we talked about this on a Discord live stream as it was breaking down here at the lower highs. I said, looks like to me you're putting in a 5-wave fractal. You're trying to hold this base. You got a nice pivot low there on this third wave. That wasn't there yet when I had drawn this. You got a nice pivot low and you bounce back up, but again, it's a lower high. To me, this Wi-Fi could be a good buy here if it does this move. I really like this move here. If it does a final shakeout low to 6,751, comes down, puts in a new low. Why? It's a 5-wave fractal, and then it's a reversal, okay? And even if Wi-Fi just comes up to retest these highs of 2 and 4, look at this, 5-wave fractal, come up to 2 and 4. If you came up and made a new all-time high out of this range, you're looking in the 40, 45% gain. Of course, it could try to just hold this range right now where it's at. That's 7,379. You're at 7,822. But I love to see one last flush out, buying opportunity down there for a bounce rebound on Wi-Fi. Let's look at XRP. My XRP targets have stayed the same. Here's your accumulation, your fractal corridor, if you will. And again, $3.50 on XRP at the 1618, $3.92. Let's call it $4. $3.50, $4. What did you do? You did a nice level change. You got above your trading range, which is right here. And now you put in what would be a double top, but you can just chop and coil and spring, okay? Bitcoin tracks the way I think it's going to. I expect this to move up to target as well. Finish off with Doge by request as well. You have your low. You have your higher low. As of right now, you have your higher low. You have a W fractal that formed. We can look at Fibonacci on here on Doge as well. Looks like we hit a target here. You got to the 1272 at 42 cents. You have 45 cents above you and 48. 48, of course, would take you back to the previous range. So Doge, by and large, you had a sell-off and you're putting in higher lows and you're coiling. Okay, if it continues a higher low theme, look for Doge also to break out. When we take out these numbers, we'll look at some higher level targets as well. Guys, hope to see you all in the Discord. Be sure to leave me a YouTube comment because unlike most people, I actually try to reply to all the YouTube comments, guys. And hope everybody has a fantastic week, and I'll see you guys on the next video.